It's no exaggeration to say that the retail sector is undergoing a period of unprecedented change at the moment. 2018 ended up being a year of distress for the sector. We saw administrations from Toys R Us, Maplins, Evans Cycles, Poundworld, HMV, amongst others. We saw CVAs announced from New Look, Mothercare, Carpetright, and we also saw store closures announced from M&S, Debenhams and Tesco's, amongst others. All of this has been in reaction to a softer consumer environment and the seismic structural changes sweeping through the retail industry. The underlying economic environment has been pretty tough. Inflation has been on a downward trajectory, but it's been stickier than expected. And wage growth has only recently picked up in the final quarter of 2018. So in real terms, we're seeing a boost in spending power, but we haven't yet seen that benefit feed through to retailers yet. However, there's a disparity between household income groups, with the least affluent households still seeing their discretionary spending fall on last year's levels. Our research also shows that consumers are worried. They're worried about Brexit, they're worried about a weaker economy, and they're worried about lack of savings. We conducted a comprehensive survey at the beginning of this year, and what we found is that 48% of respondents put Brexit as their biggest concern. And what this has led to is a fragmentation between the performance of discretionary and non-discretionary spending, and also a polarisation between the performance of online and stores. At the same time, retailers are operating in a really hostile cost environment. The Retail Economics Retail Cost Base Index, which is our own proprietary data, measures operating costs facing the industry split by labour, rents, rates, distribution costs, utilities and central costs. Our overall forecast for operating costs in 2019 is that they will rise by about 3.5%, outpacing sales growth for many retailers. This will continue to put retailers' profit margins under intense pressure, especially in a fiercely competitive market that's being characterised by heavy discounting. So all in all, 2019 we expect to see a continuation of many of the pressures throughout last year. Online, which now accounts for about 18% of total retail sales, is expected to continue to accelerate. Our forecast is for a rise of about 15%. The experience economy will continue to grow in importance. And in our view, following 2 decades of importing deflation from China and many other countries, there's an abundance of physical material possessions in the UK. The economic value that many consumers attach to physical products is diminishing, and it's left them wanting more, it's left them wanting experiences. Against a backdrop of rising costs, it's left many retailers struggling to adapt to a more digital and experience-led business model. And put really simply, many retailers are burdened with too many stores, unsuitable space, inflexible lease structures, while a greater proportion of their sales is shifting online. This is putting pressure on business models, and this will be the overriding priority for many retailers throughout the year.